Amanda Lang is CTV News' chief financial correspondent. Hi, Amanda. Good to see you as always. Thanks for making the time.
Hi.
So let's start with oil prices. What are your observations today? Because it was a bit different than every day that's preceded since the onset of this conflict.
Yeah, I mean, there's obviously some interesting cross currents at play. You'll remember we came into this year with the story that there's a glut in oil in the world, that there's way too much supply relative to demand. Even though that story was out there and many analysts were downgrading the forecast for oil prices, it kind of held firmer than you'd think, partly because this very conflict was being talked about and worried about and priced in. Just yesterday, the World Bank put out a new forecast for oil and other commodities, looking for a 7% decline this year, 14% over 2 years. So the negative story, which for most of us is a positive story, not if you run an oil and gas company, but if you care about the inflationary impact and the price at the pump, is that oil prices should be getting weaker. There's all of these cross currents, though, of course, because we don't know how long the conflict will last, and we don't know what it'll do to some parts of the supply chain, not necessarily the ones that affect us, of course.
Yeah, could you reflect a little bit on sort of the component parts to oil price increases, and in particular with respect to this conflict, because you've got actual production and then you've got the transport of that oil, which is a big political focus vis-a-vis the Strait of Hormuz.
For sure, and it's interesting, of course, to see one of the things that happened in the market today that I'm sure people are talking about is this rumor that they're at the beginning of a willingness to talk, that Iranian intelligence officials reached out to American intelligence officials. Whether it's true or not, what it said to me, Vashi, is any sign of sort of a ceasing of hostilities that would open up the Strait of Hormuz will be seen as a huge win, certainly for oil prices, because there is a natural bottleneck. We have tankers that have just dropped anchor because they don't want to enter into a conflict zone. It's for most of us in Canada, North America, it shouldn't have much impact. Canada gets about 10% of its oil from Saudi Arabia. Most of our refined product comes, of course, from the U.S., or we refine it in the East Coast. So there's no immediate impact, but we do play off that world price, and everybody prices their future costs off what it's going to cost them per barrel. And so it creates this kind of inflationary buildup, whether or not we're buying those barrels or not.
And so could you talk for a moment about the inflationary aspect of this? Because I think people who are watching right now are, of course, thinking about what does this mean for when I fill up my car?
Yeah, I mean, it remains to be seen. I'm going to go back to, even though the market has not reflected it, analysts after analysts have said there is a glut of oil in the world, that supply far exceeds demand, and that some of the reason the World Bank just lowered its forecast is because there are these structural changes, including the arrival of electric vehicles in developed markets, that are just going to change our consumption patterns. So if you're a believer in that story, that we have more oil than demand, by the way, not necessarily a positive story for Canada or our resource companies, but good for consumers if it brings the price down in a moderate way, then you would say, well, the price at the pump won't be high for long. There might be a short-term reaction as global prices do jump up because of the conflict. I would suspect, Vashi, that we'll see the price start to reflect again the supply-demand picture, which it has yet to do. But at some point in the weeks ahead, that we start to price in that reality that there's a lot of oil in the world.
So why are there some analysts out there surmising, like Goldman, I think today had $100 a barrel, like here's how it happens. There are others saying if this does end up being protracted for a couple of months, you could be looking at $200 barrel oil. Like, how do you reconcile that for people watching?
I mean, certainly if you can't get that oil through, right, all of Saudi Arabia's oil, all of Iraqi oil, obviously you're going to see an increase in the price. There's no question about it. So those are probably scenarios based on the expectation of a prolonged conflict. And yeah, you could see big spikes. And again, it's not necessarily because we won't have access to oil, but it just means that the next available barrel to people is going to be expensive, and that drives up the price that we trade at as well. I would say for Canada's resource sector, it's not a terrible thing. If you watch the stock markets, of course, this week, the TSX actually did pretty well relative to the U.S. markets, partly because energy stocks, gold stocks were doing well. So it's sort of in our favor, even though it might be slightly inflationary. The $100 oil, $200 oil is a worst case scenario for sure. And although analysts might be pointing to that as a possibility, I haven't seen that as a particular base case.
Okay, and what about markets? If you could expand a little bit on what's happening there, because that's been a sort of interesting thing to watch this week as well, a little bit of fluctuation.
Yeah, I mean, honestly, you can't really explain the markets, and in a time of uncertainty like this, what we know is that investors like facts and information, and when there's a kind of a vacuum of them where they're moving fast, when there's a lot of speculation, it creates these gaps, this sort of volatility in trading. What I would say is what we have seen, which is positive this week, is when we've seen big drops, there are willing buyers, right? For every trade, there's a buyer to a seller. And we've seen the markets rally back. And that suggests that there are people out there who think possibly this doesn't go on that long, or possibly that even if it does, there are enough underpinning reasons. Because remember, I'm talking really about the U.S. stock market here, but it's driven by about a dozen names. And they're, although they would be affected by a high price of oil, they're not really affected in the short term by this conflict. So people might start to look past it. What I would say is, don't watch it if it's giving you a stomachache, because there will be this volatility. It's going to be around for a while. And if it doesn't matter to you, it's not something to watch day by day. It's going to be messy.
And more largely, when you are looking ahead at the economy, more so in the aggregate, what will you be watching for to see whether or not this is having a resonant effect elsewhere?
In the Canadian economy or the global economy?
Let's do both, if you don't mind.
I mean, for Canada, I think we have very specific issues. I think we will continue to look for, I will be looking for, as I'm sure you will, actual motion and movement on some of these big projects. The Premier of Alberta has already said it. This is yet another reminder of, if we want to play in this space, if the world is ultimately moving away from oil, let's play while we can. Let's get new pipelines built. So you're going to see sort of that push happening. I'll be looking for actual movement from the Major Projects Office, that things are actually happening, critical minerals, that we can actually move forward. New deals happening in defense will be a hugely important thing to watch, right? Job creation, Vashi, is going to be something that's going to matter a lot in Canada. And then globally, of course, the price of oil is going to have a big, inflation is going to be the single biggest metric to watch. Do we get the inflationary pressure, and what impact does that have on global growth?
Okay, I'll leave it there. Amanda, thanks for your analysis. Appreciate it as always.
Thanks.